recognize is that the central bank is injecting rubles into the domestic economy by buying gold at a fixed price of 5,000 rubles per gram. And the objective of that is to make sure that finance is still available for gold mines. And particularly, I think there are 3 new gold mines being developed in Russia. So those projects, the collateral, if you like, that the banks are providing for those projects, in the form of gold, has to be available. So that is the primary purpose of it, so far as we can see, and that's come out from the statement from the Russian central bank. It is only available to domestic banks, so this is not an international situation. When this was announced, the 5,000 ruble price was at a discount of roughly 20% to the current market price of gold. That has now changed because the ruble has rallied substantially and also the gold price fell a bit. Today, the premium is around about 5%. If the ruble rallies further, then you're going to find that the price of gold in rubles falls to that 5,000 level. The interesting thing is that the statement from the Russian central bank was very, very simple and straightforward. It was literally just as I've described it. There was nothing further on that. Now, it seems to me that it opens up the possibility that if, let us say, a Russian bank can buy gold outside Russia for less than 5,000 rubles a gram, then it is going to be attracted to the idea of an arbitrage. Now, obviously, it can't walk into London and say, right, we want to take, buy gold and or go on to COMEX and take delivery because these are unfriendly nations. But it can go to gold centers such as Dubai, for example, and bid up for gold. So what we could find is that in a very tight situation, which is really how I would describe the gold market, the physical gold market at the moment is extremely tight. There's very little stock around, as it were. You could find that the gold price gets bid up. The bullion banks find that they're short. And worse than that, the central banks basically have leased or swapped a lot of gold for paper contracts to provide liquidity into the market. I mean, this is the sort of normal function that the Bank of England oversees, arranging leases and so on and so forth. Now, from these actions, I think the central banks who I'd call neutral and not involved on either side of the, sort of Russian and West sanctioned story, are probably sitting there and thinking, well, hold on a minute. We don't actually have possession of our gold. Now, possession is, sort of lack of possession comes in two forms. One is that it's leased out to someone else, so someone else has actually got it. Or alternatively, it's actually sitting in a vault in the Bank of England or the Federal Bank of New York. In which case, what do? You probably think, we want to get this back. Now, it could well lead to, requests for repatriation of gold, but let's not quite get that dramatic yet. But I think more likely what you will see is a reluctance to provide that liquidity into the bullion markets, which the bullion markets have become accustomed to. So we're going to see the availability of leasing and swaps, I think, going down significantly, and that could have an effect on the short positions because the bullion banks are all short of the paper market. It could have quite a significant effect on that and could drive the price of gold higher. Now, what's the Russian interest in this? Well, the Russians, I think as far as the Central Bank of Russia is concerned, she would rather replace useless dollars and euros in her reserves with physical gold, which can't be touched by anyone. So, there's no counterparty risk. Those currencies at the moment are completely valueless as far as she's concerned. Now, she can't get rid of those currencies because they're embargoed, but she can add to her gold reserve. So I think she would not stand in the way of a Russian bank, say, venturing outside Russia to acquire gold on that arbitrage basis. Now, the thing that's likely to trigger it is a further rise in the ruble rate. The ruble fell so that the cross rate with the dollar was at one stage about 150. Currently, it is 83 or 84. So you can see that it has recovered very sharply. Before the Ukraine situation started, it was happily trading around about 70 to 75 rubles to the dollar. If we get back down there, then you're going to see the arbitrage opportunity opening up if the price of gold hangs around this current level. So I think that's the way it is likely to play out. I can see, first of all, we must bear in mind that what has been set up is purely for domestic financing operations within Russia. It is not available to foreigners at all. But it seems to me that it leaves open the possibility of arbitrage whereby Russian banks go into gold centers in neutral territories such as Dubai. I think Dubai is the classic. Acquire gold there and then sell it on to the Russian central bank at 5,000 rubles a gram. So that, I think, is where we are with it. It could create a significant problem for the West insofar as it exacerbates the shortage of physical gold at a time when the signal's been given to other central banks to stop leasing and swapping gold for paper in the markets to provide liquidity. So it's an interesting situation, but not quite as some people have put it out.
In addition to this gold policy of the